Good evening. Ira Epstein with your SPDR ETF wrap-up, and this is for Monday, the 27th of December, 2021. Well, you know, there was a lot of questions, and I was getting them from those of you that watch me on YouTube and you write me and so on. I've had people say Santa's not coming, it's not going to happen this year, blah, blah, blah. Santa and his dwarfs all came already. They delivered you a gift. They don't have to do it every single day. They can back off here. But you're in a pattern right now over the next 5 to 7 days where typically the market tries to hold an uptrend at this point in time. And you went up and you've already made some new all-time highs in certain of the stock indices today. So arguing that, that's gone. We know that we're dealing with the COVID situation, but in order to get workers back, the CDC today said, hey, you know what we're going to do? No more 10 days of quarantine. 5's enough. If you've come in contact with somebody, you might want to, after the 5, wear a mask whenever you're near people and so on. But within 5 days, if you're not getting it, you're probably not going to get it from that series of contacts. And the reality is the market's adjusting to this Omicron. Now, are the hospitals filling in America? You know they are. They're filling in Europe and other places. You know they are. But those are primarily, I want to use that word primarily, people that did not get their first round of vaccine shots, in plural, or a booster. That doesn't mean you don't get COVID. These vaccines don't stop you from getting COVID. They stop you from getting seriously ill on COVID. If you get a flu vaccine, it doesn't mean you're not getting the flu. You're not going to get as ill as you might be without getting it. And people don't understand that. Now you're starting to see in America, and I'll end it right here, where there's another move underfoot. They today threw out, just like I'm doing right here, they said, okay, we're thinking, and we're talking about at the White House, maybe you can't get on an airplane if you haven't had your COVID shots. Okay. I don't know that that'll stop the people that refuse to wear a mask once they get on and create a whole scene for everybody else and how rude they are to the rest of the people on the plane. I mean, if that's the rule, don't fly if you don't want to do it. But you don't have the right to sit in that plane and say, I'm different than you. I have the right to breathe the way I want, and I'm going to just do it. It's not right. So I would say those that get the vaccine shot, you start eliminating it. A year ago, I warned you, it's going to be those that were vaccinated versus lines drawn that those that aren't. And what's going to happen is you're going to start seeing that, yes, you have the right to not be vaccinated, but you don't have the right to eat in a restaurant if you don't have that vaccine card. You don't have a right to go to a movie theater. I'm talking Chicago. I'm talking New York. I'm talking LA, the big cities. I'm not talking all the little cities, but it's going to spread, because people will get fed up and they're going to say, you know, maybe we got to follow some more of these rules. In Chicago, they're already fighting because January 3rd, they're supposed to take a new rule to get into anything but a public office building that you might be working in, your residential buildings, schools and churches. You need to have a card and show it. I don't know how grocery stores work. I can't answer that. But the restaurant association's fighting it. They went to the 14th, and I, for one, want them to lose that battle. And the reason is real simple. If you don't want to get a vaccine, that's fine. But if I'm eating in a restaurant, my mask off, doesn't mean I have to be near you. It's that simple. Not saying don't go eat somewhere. Go wherever somebody is that doesn't want to pay attention to the rule. Just don't go where I'm going if that's the rule. I pay attention to the rules. I don't break them. We're going to switch gears a little bit. Remember, I asked you to tell me which markets do you want me to cover? And I said I'd pick one, and we'll start switching them out during the week and so on, and we'll do them on a regular basis. So if you have markets you want me to cover, it could be an individual stock, a SPDR, an ETF. Write me. Don't give me anything that has no volume. It doesn't make sense to try to cover that. And there's plenty of those out there. I need some volume. Now, obviously, a popular one is XLF right now, which is the financial services. So when you look at this sector, you know, you're saying, what's going to happen? How are the banks going to do? How are the brokerage companies? That whole financial sector. So this is what we have. Now, the first thing that strikes me on this chart is, unlike so many other charts, it is very prone to leaving gaps on charts. Understand that and say, okay, it's not one of those like Tesla where I was making a bet with you, it would go down, fill the gap. And since it filled it, you do understand how much it has rallied. It's dramatic since it did that just, 5-6 days ago? Filled the gap as we were talking. I'm saying this doesn't necessarily do it. Just to understand the nature of the beast. We have a trend that is up. Higher lows, higher highs. Now you have an outside day up today. Now, if today's low is taken out, you're going to do damage to this pattern and probably want to then go down to the closest moving average under it, which is right back against these. So I don't know how much damage that would do on the chart. That's the rule of thumb I have. But the pattern right now is such that you have higher lows, you have a higher high, you're over the key moving averages. The next upside target is 39.72, and momentum is still fresh where it's not overbought. So this market has a lot going for it to get up to that number. If it hits that number, that is where I think the pros will take money off the table. In Apple, you have a market that fought a battle, came down to the 18-day average. It has climbed its way back up. It's instantly overbought. Okay. Apple today also announced that in New York City, effective, I think it's tomorrow, all Apple stores are closed until further notice. Again, Omicron. So that's what you're dealing with on that. They don't want to get their staff sick. And if you've been in Apple stores, you know how insanely crowded they are. And it is. I love using that word. It's so popular. And that's what they've decided to do. Whether that'll spread to other cities, probably. I wouldn't be surprised if they do it in Chicago. It's just as popular here, LA, San Francisco, the big cities. Wouldn't surprise me at all. Battleground for AMC. Well, you're not getting, if you saw The Matrix, it's certainly, I haven't seen Spider-Man, but I can't imagine it's anywhere near as good. I was disappointed in it, watched it over the weekend on my HBO Max. I doubt that it did it real well at the movie theater, you know. Am I a movie critic? I'd love to be. Remember, I owned a movie theater, so I think I have an eye for what can bring in money and not bring in money, and I don't think that's going to have any legs to it, so to speak. And I love the series. I just didn't like this particular one. I didn't know what I was watching, and I'm sure I'll get comments on that. But you are in an uptrend until you get back and under the lows right here of Thursday, which was 26.82. The resistance is formidable. It's the 200-day average at 32.73 up to the upper Bollinger Band at 33.12. I don't know. I'm bothered by the looks of that chart. It's not bearish, but it's. I don't know that it has a lot of upside left. In Facebook, the Meta Platforms is their new name. This is the right one. This is the chart. What do you do when you get up to a 100-day average and an upper Bollinger Band? So long, Joe. I'll take my money just the way back here. Often it results in some backtracking. I'm not saying it has to go this exactly deep, but that's what I think the pros are doing. Overbought into a lot of resistance right now. In the industrial sector, you have lower highs, lower lows. I want no part of being short the industrial sector. You've got to ask why, and I'm going to say, I have this belief that we're going to beat whatever that means with vaccines, pills. We're going to beat this COVID thing to the point where we live with it. And as we live with it, and we being the world, and as we live with it, the factories start humming, other things start happening. I don't want to be betting against that. The fact that the market on this, as fast as it's moving, is setting a new high, and a number of these indices today, what story do you think that is? You think that's a bear story? What planet are you from? Higher high, lower low, semiconductors. What did I say to you all last week as the market was coming down? I want no part from my type of trading. When I talk to my traders and understanding there's a 2-year backlog at these companies with pricing power. And I believe that the COVID is not as bad on this round as the Delta round. That's not a market that's got the makings of a bearish market. Let it run its correction off. THCX, you lost the embedded reading. And we were talking, I said, with this, I think it's going to the 18-day average of closes to regroup and figure out what to do. That was the sign to be out of any shorts that one had. And that's pretty much what this market has done, right on the money. Now we get the home builders, all right? You know, the supply for homes, it's not there. You're going to have strong home demand for a long time to come. If you're listening to financial TV at all, the discussions are, will we get back to offices the way that it used to be? And so far, the pros seem to be falling in the camp of no. We will get back to offices. You might not be 5 days a week. You might be 3 because they want you to be with a group of people to get the juices going, which means there's going to be more demand for your rental apartment, your condo, your home, whatever it is. You're going to want more space if you can afford it. It's hard to live in a small place when you're going to be there most of the time, and I'm sure people are going through that. So you want the ability and the luxury of more space. That demands more money just about anywhere, and that's what we're dealing with. So I get the correction, but I also said to you as this whole thing was happening, I think the pros are out, gone, buy. My videos are up there. That didn't mean I came out and said buy it. Getting out of shorts is the first phase, waiting for a trend to develop if it's going to change. Hasn't told me what it's doing. Energy, bullish. Until today's low is taken out, I now think you're fully in play for getting up here. I'm wrong on my thinking if today's low of 54.26 is taken out on Tuesday or Wednesday. I'll live with that. The emerging markets. Okay, they put in their lows here. We talked about it. They're now back to the resistance. I don't think this is an area yet that is ready to run just yet. It could be, but I didn't see it on the weekly charts. I can tell you that. And while I didn't do anything for you all here on YouTube for the past 2 weeks now, my weekly subscribers, my daily subscribers, paid one, they haven't missed a beat. They're getting them. I just had family, other things going on. And by the way, I already know that this Friday morning, this coming one, I already have an appointment where I'm not going to be home to even do my regular videos in the morning. Okay, pretty good notice. And you know it's going to be a light trading day as the markets close early in a number of markets that day. So it all worked out for me. I got to take my sick pet to a hospital again, and I've been dying to get him in, and they gave me one appointment shot. I love my animal. I'm going. Higher lows, higher highs. Fighting the upper Bollinger Band, overbought. Okay, I'm friendly to the gold market, but I certainly would never tell my clientele to buy an upper Bollinger Band. Opportunities. It either embeds or it corrects now. I wait. If it goes without me participating, c'est la vie. I've missed plenty of things in my life. The mining ETF, this I like, and I mentioned to you, I like this one a lot. It looked to me like it had bottomed back here, and now I think you need a better picture, but because it's overbought, I can't tell traders to buy it. This is a profit-taking area, but I like that market. I like copper a lot. Copper's one of my favorite trades for 2022. No, I'm not saying it's going up here into the 50 area. I think that this is a big base that it's building ultimately, and I think that the name of the game is how do you use that as a base if it breaks out to the upside. TLT, I think you made another top in this market. I think you made a top in interest rate futures. I can see them going sideways and developing a stronger top, but I think that the path is going to be more bearish, but not aggressive. I am not in the school of thought yet, where you're going to prove to me that dot plot of 3 of them, maybe beginning in June, is going to happen. I'm not in that camp at all. I want to see what happens. I've got to get through March, be able to see how bad this Omicron is. Are the supply chains filling? I know all the inflation that we're all seeing via the supply chains, but when they fill, that inflation disappears like that. The pricing power isn't there. If the sweaters on the shelf are back in stock, if the socks are back in stock, if you get food back in stock and you're not worried about the truckers and everybody getting it to you, just telling you there's certain things you've got to keep your eye on. And there's other pressures that'll go up. You know, you'll see that. FXE, look at how this is just going sideways. What is it going to be? Is that a top or a bottom? Hard to tell, I'll tell you. I'm just watching it spin in there. I love when I get these patterns because these are the patterns when they narrow in like that, the way they did here. that can offer the big moves if you can catch them as they come out of them. That's the hard thing to do, but that's what I try to do. You know, we talk here about all the technical parts that I have. Do you know how to use them? Do you know how to put them on your chart? You know what they mean? My charting course is 8 hours of video, 54 videos. It includes the charting software, the same data that I use to create the videos. You have that. It includes for that, in the morning, my morning subscriber videos. And I don't mind giving you my written updates during the day and everything else to help you join this family of understanding the theory. You're going to learn the swing line, which determines what is the trend and the risk associated with it. Filtering it with 5 different moving averages. I only show you here 3. There's 2 more you're not seeing at all. Then we get the Bollinger Bands, the slow stochastics, how I put them together and work with them, and last, window envelopes, because markets don't always go to Bollinger Bands, but often they'll go to a window envelope. Kramer uses them, I use them. I know most of the really solid texts I look at and respect use them. We have different ways of using them. Well, that's okay. We have different moving averages we use. I like to use an 18-day of closes. Some people use a 21. That doesn't mean the concepts aren't there. I'll teach you what I'm doing, why I'm doing it. Go to our website, under the word education, it's all there for you. It's pretty simple. Put in a little bit of effort, learn. You can always call my staff to help you get going. I'm Ira Epstein. You have a good evening. See you tomorrow.